Hey everyone, Brian from Bear Bull Traders here. It is the weekend, Saturday, April 12th. And this, of course, is the weekend video where we take a look at what happened last week in the markets. And of course, there is an awful lot to unpack there. And then we'll take a look ahead, see what we got coming up next week. So we've got some interesting news already on Saturday morning here. Some news on tariffs and how they're maybe going to not apply to iPhones and some of the other electronic stuff. So that's probably going to impact stocks like Apple, Nvidia on Monday morning. But anyway, let's get down to it and start looking at what happened last week. So let's start out as we always do, quick week in review. And all it took was one tweet out of the White House this week. And that was all the market needed to give a rip your face off rally. And I think they've only been about two other rallies that have been stronger than this. And some of them go back to 2008 that happened during the financial crisis, if you can remember. So as I've been saying all along here, watch out, because in the middle of these bear market moves, you can get these rip your face off rallies. And certainly that's what we got this week. The tariff war of words continued to escalate this week between China and the US. The rates are over 100% now on both countries. I think 145 for the US tariffs and 125 for China. They both seem to be saying that's all we're going to do. So maybe there's a little bit of now it's going to be a staring contest to see who blinks first. Although the as I mentioned already, just Saturday here, the U.S. announced that some of the phones and other electronics are going to be exempt from tariffs. So that'll be interesting to see what happens on Monday. Both CPI and PPI data we got this week, and they were a little bit lower than expected, or a lot lower than expected. So inflation coming down, but I kind of believe this is a short-lived sort of effect as we start to see higher prices being paid as those tariffs start to kick in on other goods. Oil prices continue to weaken, and they typically do during a economic turndown, and that's maybe what the oil market is pricing in, along with I believe the Saudi is going to start increasing their production there, so that might be also driving prices lower here. So kind of an ominous sign, and we'll draw on this a little bit later, but usually as yields really swung wildly this week. Yields don't usually move around as much as we've seen them do this week. They dropped initially and on the tariff news, and then they ripped higher. And we don't usually see that obviously move in that kind of a market, but that's what we saw. And usually what happens when yields go higher, the dollar strengthens, but that is not what we saw this week. That was a real divergence from something that we would consider to be the norm. So a bit of a warning flag, maybe really in talking about more deficit spending in the U.S. I think some of the investors in treasuries are feeling a little bit nervous, maybe not buying them, or certainly demanding a higher yield, even as the dollar goes lower. So that's interesting, sort of bit of news there. Of course, we did get a rally back on all the indexes. The small caps were a bit of the laggard there, and you can see that reflected in kind of the retracement we got there this week. Technology and industrials led the way, gains higher, and real estate was the only loser, and by a small amount. But again, if interest rates are going back up again, real estate, the interest rate sensitive stocks are going to not gain as much or suffer. And there's, you can see here what I'm talking about. We went from 3.64 last week to almost 4% on the 2-year. Again, really wild moves in the treasury market. You don't see that kind of a move. And same with the 10-year from 4 to 4.5, and I think it was even higher during the week of 4.6. And again, as I mentioned, usually when rates go up, dollar goes up, but the dollar really took a dive this week, maybe showing some lack of confidence in the U.S. Dollar. I don't know, 2.9% down, and Bitcoin again just hanging around this 84,000 level, although we did dip down below 80,000 early in the week. So that was a bit of a long review, but there was, as I said, a lot to unpack there this week. and probably even skipped over some stuff. So that was it. And this is a part where we take a quick break and just mention my books that are available on Amazon: How to Swing Trade, Profiting as an Active Trader. These are more oriented to swing trading and long-term trading. And of course, my How to Trade Options book, the latest one, which talks about options from right from day trading to swing trading and even position trading on that. So if you want to check those out, they're available in Amazon and available as either e-version audio or as hard copy. So let's get down and start talking about some indexes here. Okay, looking at some indexes here, and you can see the kind of whipsaw action we got with yields. That initial drop last week, announcement of tariffs, and then of course we got this amazing rip higher. And again, you normally see these kinds of moves in the treasuries, but man, did we ever go crazy this week? And again, seems like we're putting in a bit of a bottom here. Again, we could be coming back up to sort of the 4.5 level on the 2-year, which again, we haven't seen that since last year. So we'll see where that one, and keeping an eye on that one for next week. And 10-year, again, like the massive whipsaw we got here as these longer term yields just rip to the upside. And again, maybe sort of foreign investors who buy some of these treasuries, maybe selling out of them and then driving prices down, which of course, as prices go down, yields go up. So we'll see if that continues. Again, the Dow Industrial Index, again, we had this rip your face off rally Wednesday after these big down days on with the tariff announcements, and then the sort of 90-day reprieve. And you can see here a bit of a sell back down on Thursday, but then again we found some area to rally from, sort of halfway between this. We did sort of go below this halfway rally here, but we did manage to finish well on the day on Thursday, and then a bit of a continuation Friday. And I suspect we probably could come up and retest this level next week again, and then maybe possibly even higher to this area here on the Dow. Again, barring any any sort of negative news, and that's of course that's always a possibility here in this market environment. Again, the Qs are the same story. I'm not going to keep repeating myself, but I think this 470 level and maybe even up to 482 could be areas that we could rally to over the next coming weeks. Again, barring any sort of new initiatives or announcements that might cause the market to drop lower here. And again, on the weekly, there's that moving average there we could get back up to. Again, same thing with the SPY. Here's a nice level here that we could rally up to, and maybe get back to this sort of 200 level if we continue to rally up here. IWM is really the laggard and has been struggling. Again, I think that higher interest rates are really a bane of the small cap existence. They need money. They need to borrow money. Some of them aren't making money, so they need to borrow money to keep operating. And when interest rates go up, this is not conducive for a small cap environment. So small caps can do well as long as they're the ones that are making money, but a lot of the ones in the IWM are not. So if you're going to pick your small caps, pick ones that don't need to be financed. Here's the VIX. I mean, we did spike up here, and VIX doesn't usually stay above these levels. Once it spikes, it drops back down. So you can see here the VIX is coming back down. I suspect that it may come back down some more next week if we continue to sort of grind higher. And the dollar, again, as I mentioned earlier, yields up, usually yields up, dollar up. But again, we've seen this breach here of this low. Again, dollar really, really dropping here. Let's just, we can take a look at the weekly here and see where the support is. Could be down in this area here, sort of 27 on the UUP, which is more obviously more downside for the dollar. And here we are, we're at 85,000 on Bitcoin as we continue to rally through the weekend here. Again, it's sort of stuck in this range here, but you can see during the week we actually traded down to just under 75,000. So interesting. Quite a wild and crazy week. So as far as positions for swing trading, I've only got two real what I would call swing trade positions on right now. One of them is gold. Gold has just been on fire, had a real significant pullback last week, but it started to rip again higher. And I'm in some gold stocks, not in GDX, but this is a good sort of proxy. I've got a few Canadian gold stocks that I'm playing right now, but this seems to be, it's had a real rip your face off rally. Talk about rallies. I've already taken some off on Friday, still holding some because I think, if we do get a pullback, I may add back again here because I think that gold could go higher as continued to be a safe sort of haven trade here. And silver, you can see here, silver really pulled back. I do have a couple of silver stocks as well. SLV is a way to trade silver on the US exchanges. So I think it's got some room to run because it didn't break out to a new high like gold did last week. But you can see here, silver, I think, has some room to run here, whereas gold looks really extended. So that's precious metals. These precious metals seem to be an area where money is flowing into, and that's where you want to invest if you're looking for swing trades. So possible setups for next week. I am short-term bullish. I think we've got a little bit more rally in us next week. I think it's the market is going to grind higher again, barring any unforeseen circumstances or news. I think the risk is currently now to the upside, and again, this is a short-term view. I think a longer-term view, I'm still bearish, but I think we've got enough room to run here back up to the upside, and then we'll start with Apple. As I mentioned already, Apple's had some news over the weekend. The exemption of tariffs on phones from China is really, I think Apple's going to rip on Monday morning. So this is something to watch here. This 209 level is a good area to target. That's sort of a moving average plus a low here, and then depending on how strong this rally is, it could be, we could see 220 again easily on Apple. I don't know where it's going to open the morning. I'm guessing it's probably going to open over 200, and we'll see where it goes from there. But it's definitely something to watch on Monday on that news. Baba, I believe, is really oversold here. I don't really like investing in these Chinese stocks, and I think the administration was even talking about trying to figure out how to delist them, which they've tried before. Again, I think there's room to the upside on Baba. Could be all the way up to this 125 level where some moving averages are, but certainly even closing a gap here to sort of 116 area could be a possibility. So Baba looks kind of interesting for next week. Google I kind of like as well as a rally trade. It could be breaking out here, especially if it breaks out through this 160 level. We could be looking at sort of 170, even that area as well for a nice rally on Google. And lastly, Tesla really seems to be holding this 220 level. We held it here, we held it here, we held it here on this sell-off. And I feel like you could sell some puts there, maybe buy some puts below it, so do a put spread. 280 seems to be a top area. If it rallies up into that area, watch that for some resistance. Again, that's the 200-day moving average around 290. So again, watching those areas on Tesla could be interesting as some swing trades as well. So that's it for what I'm looking at next week. But again, short-term bullish, not long-term bullish. But for the next week or so, I think we could see at least a bit of a rally back here. Okay, so let's wrap things up for the week of April the 14th. There's your levels on the Dow, Q, SPY, and IWM with support and resistance. We don't have a lot of economic events that's going to be that interesting this week, although we do have some retail sales numbers on Wednesday before the market opened. They'll probably be pretty good given the fact that some people were out buying stuff before they thought the tariffs were going to kick in there. So retail sales probably up a little bit. Other than that, we continue on with earnings seasons. We got Goldman Sachs in the morning on Monday, some other banks Tuesday, and most interestingly, we've got TSM Thursday morning, Taiwan Semi, and then of course we've got Netflix after the close on Thursday. So that should be an interesting. I think they're expecting about a 5.5% move one way or another on Netflix. So let's do a quick look ahead summary here, high level. I'm going to be watching these yields in the US dollar to see if this divergence continues. Again, sort of waning confidence maybe in the US economy. We'll see how that all plays out next week. Gold and silver, this seems to be where money seems to be going. It's so we'll continue watching for strength there. Next week, I think the short-term risk, given any sort of really bad news, the short-term risk is likely to the upside. I think the markets are still a little bit short, and I think there could be some more short squeeze come, although we won't get anything like we got on Wednesday. Like I said, a little less volatility next week as this tariff situation settles down. And again, it does seem like even over the weekend here, White House has come out with this new exemption for electronics. So interesting move there. So that's it, everybody. I hope you're having a great weekend. And as always, we will start pre-market show 8 o'clock on Monday morning, live on YouTube as well. And of course, if you like this video, please like and subscribe. Always appreciate that. So take care, and hopefully we will see you Monday morning.